Hello and welcome. This trading strategy has an incredible winning rate of 70%, so you might not be able to afford skipping this video. So what are we going to do? We are taking a look at a very practical and effective trading strategy which we will build and test in Python. This video is based on my video backtesting Rayner Teos trading strategy, where the problem was, as some of you also noticed, that we were just testing the S&P 500 index and only got a very low amount of buying signals. I can tell you that this will change in this video, so definitely stay tuned, it will be worth it for you. Okay, so let's take a look at the strategy. So we have a general condition, so imagine any stock. And we are only getting into the next steps if the stock price is above its own 200-day moving average. If that's the case, then we are buying this stock if the 10-period RSI, which we'll come to in some seconds, of this stock is below 30, and we are buying that on the next day's open. We are selling this stock if the 10-period RSI is above 40 or after 10 trading days, so the maximum holding period is 10 trading days. And again, we are selling on the next day's open. We will apply the strategy to all 505 single S&P 500 stocks. So let's take a look at the RSI calculation. So how do we calculate RSI? The first step is to calculate up and down moves. That is, an up move is taking the daily return if this return is positive, and take 0 if the daily return is negative or 0. A down move is taking the absolute value of the daily return if this return is negative, and take 0 if the return is positive or 0. The next step is averaging those up and down moves. First, we have to pick an average method. That is, for example, a simple moving average or an exponential moving average. We will take Wilder's smoothing method, which is the same as an exponential moving average, but with a different smoothing factor. The smoothing factor in exponential moving average is defined as the alpha being 2 divided by n plus 1, where n is the RSI period, so in our case 10 days. The smoothing factor in WSM, so Wilder's smoothing method, is defined as the alpha being 1 divided by n. The problem now is that there is no WSM function in Python, so to get the WSM alpha of 1 divided by 10, because as said the RSI period is 10 days, we would have to use an n of 19 in the exponential moving average formula. Why 19? Because take a look at this formula. 1 divided by 10 is the same as 2 divided by 19 plus 1 is 20. 2 divided by 20 is also 1 divided by 10. So that is why we are taking a 19 here. In the last step, we are just calculating RS and RSI. RS is defined as the average of the up moves divided by the average of the down moves. And then we're just taking the RSI formula, which is 100 minus 100 divided by 1 plus RS. So let's code that in Python. By the way, very important, if my content is helpful for you, please be so kind subscribing to this channel and liking the video. That is very helpful for me. Thank you very much in advance. Okay, so first of all, we need to import some necessary libraries. We need Pandas for data handling. We need yfinance to get stock prices from the internet. And we need matplotlib for some visualizations. And what I'm also doing is I'm turning off warnings, as they're just annoying, but you don't have to necessarily do that. I'm just doing that for presentation reasons here. Now I want to get all ticker symbols for all S&P 500 companies. So I'm defining a variable here, tickers. And now I'm just using the handy read HTML function from Pandas. So I'm using pd.read_html. And then I'm using this table from Wikipedia containing all S&P 500 companies here. So I'm just reading in this table. So I'm using the link here as a string, index for 0. And then let me print that out for you. As you see, now I'm getting this table here, right? And the only thing I'm interested in is this column here. So I can use the symbol column and I'm just transforming that to a list. So then I'm getting a list containing all ticker symbols here. Right, so let me print that out again. Now we see we're getting all ticker symbols here in a list. Now in another video on my channel, some of you have told me that those ticker symbols containing a dot are not valid. So we are not getting data if this is containing a dot, and we have to replace it with a dash. We are doing that here, so you don't necessarily have to do that. There are only like 2 stocks with that problem, so it doesn't have that large impact. But nevertheless, we are doing that. And thank you for the people who let me know. Always be kindly invited to give me your feedback or your suggestions. I'm always thankful for that. So I'm just using a list comprehension to get rid of those dots and replace them with a dash. So I'm just using replace, and I'm just saying, okay, replace the dot with a dash here. And I'm using list comprehension to achieve that. So I'm just using for I in tickers. Okay, so if I'm printing that out again, now you see that those with the, with the dot are now with the dash, and they don't cause problems anymore when we are getting data for those ticker symbols. Actually, you have to get rid of 2 ticker symbols which are causing errors. So I'm just giving you the index. So you have to pop 474. So just execute this syntax here, which is VNT, and you have to pop 489, which is WRK. That's it. Now, let's get into action and define a function here, which is calculating the RSI for a particular asset. So we're using define. Let's just call that RSIcalc. And this function is taking an asset as the argument. Okay, so this one's going to be a pretty large function here. So the goal again is just to have a function which is doing all the explained RSI calculation steps and returns us a data frame containing the RSI for a particular asset for every single trading day. So first of all, we are defining a data frame inside this function. And now we're using the y-finance library and pick the download function, provide the asset as an argument. So the asset will be a ticker symbol. And we are just starting, let's just go 10 years back, roughly. So let's just start in the beginning of 2011. And we are not defining and here as we're just going until today. Let us return this data frame that you are getting an idea which data we are manipulating. So let's execute that and call this function. And now we are just providing the very first ticker symbol. So I'm just indexing for the very first ticker. So let's execute that. And now we see that we are getting this data frame, and this is our base data frame where we are applying all our data manipulations to calculate the RSI. So let's get rid of that. First, we are creating a column which is accounting for the general condition, the 200-day moving average. So we are just using, let's just call it MA200. And now we are accessing the adjusted close column and roll over that with a window of 200 days and just take the mean out of that. So what we are doing, we are just taking the mean over the last 200 days. So we have our 200-day moving average for the very first general condition. Also, we need to calculate the relative returns. That is important to define our up and down moves. So let's just call that price change. And this is just taking the adjusted close column again. And we now are just using the PCT change function. So with that, we are getting daily returns or relative returns. Now, as explained in the beginning, we are defining our up moves. So I'm just calling that up move. And as explained, this is just taking the price change column, so the daily returns. And now we are applying a lambda function. And we are doing what we have defined in the very beginning. So we want to get the x, and x should be x, so x is the daily return, if the x is larger than 0, and else should be 0. So if you remember it, we have defined the up moves exactly like that. Take the daily return if the daily return is positive, else just take 0. And the down moves, so we are just creating a new column here. And basically we are doing the same, but with the exception that we are taking lambda again, and then we are taking the absolute value of x. So x again is the daily return. If this x is negative, so smaller than 0, and else we are taking 0. So just check the beginning of the video again in case you don't know why we're doing that. This is just the definition of up moves and down moves. And as a more detailed explanation, the lambda function, or this apply function of the lambda function, is just taking every single row in this data frame and doing that to every single row entry in this price change column. So the next step is to average the up moves and down moves. So we are just calling that average up. And then we are taking the up move column, apply a EWM function for the exponential moving average. And as explained in the beginning, we are taking a span of 19 days and take the mean out of that. And the same for the down column or the down moves. So I'm just copy pasting that, renaming that, and take the down moves here. Right? Okay, so now it's time to drop some NaN values. So you have to imagine I'm not returning the data frame now, but it will be full of NaN values. So in case you want to check the single steps, you can always return the data frame after each step. That's no problem, but I'm not doing that right now. So we have NaN values because we are rolling over 200 days. So the first 200 days will be NaN values. Then we took the price change, which is causing NaN values. So we're just dropping off the NaN values of this data frame by just reassigning this data frame to df.dropNA. And now it's time to calculate our RS. So we are creating a new column here, define that as RS. And this is just, as explained, the average up divided by the average down. Okay, and finally we are defining our RSI value, which is, again, I'm using a similar logic to this above here. Applying a formula to the RS column. So I'm using the RS column where we have our RS values. Now I'm applying a lambda function again, and now I'm just providing the formula which we defined in the very beginning. So I'm just taking 100 minus and then 100 divided by x, and x is the RS value in every row plus 1 here. Okay, and that's basically it. So we have our RSI values for every single trading day for our stocks here. Okay, so last but not least, we have to define when we are buying an asset. And therefore, we just have to define the conditions here. So I'm using a log function here. So there are other ways, but I think that's the most, or the best to understand function. So I'm just using a locator function, and define when we have a buying signal. So I'm creating a new column, which I'm calling buy, and I'm filling in a yes if a certain condition is fulfilled or if certain conditions are fulfilled. So what I'm doing here is I'm just taking the adjusted close column and check if this value is larger than the 200-day moving average. So this is the general condition which has to be fulfilled, right? And also, the second one is that the RSI is below 30, as explained in the beginning, right? So we're just taking the RSI and just take if that's smaller than 30. Now we are defining the column name, which I'm just calling buy. And if those conditions are fulfilled, I want to have a yes value in this column. And what I'm also doing now is I'm defining a no value. So we have to define the conditions if this is not fulfilled. So let's quickly do that. So again, we're using dflog. I'm just copy pasting here. So we're taking this one here. So if this is not fulfilled, so I'm just changing the direction here. If this is not fulfilled, or where's this symbol? Come on. Sorry for that. I was working on a Windows system in the last weekend. This is somewhere else. So yeah, we have the RSI, and this should be larger than 30. And again, we're taking a buy column here, and we're just saying, okay, then fill in no here. Okay. So yeah. These are all the necessary steps to calculate our RSI, and we have also our buying signals here, right? So yeah, let's take a look at this data frame. So let's just execute that and call this this function again, sorry, and provide the very first ticker symbol. So now you see we have a larger data frame containing all our columns we have defined. So this is the 200-day moving average, this is the daily return, we have our up move, our down move, and everything what we have defined. And here are our RSI values and our decision if we should buy this asset or no. Okay, so this is basically how this function is working. And what we have to do now, so I'm getting rid of that right now. What we have to do now is to define another function, which I'm just calling get signals. So let's just call that get signals. And this function is taking a data frame as the argument and is providing us the buying dates and selling dates. With those dates, we can afterwards easily calculate the profits out of those trades. So let's create two empty lists here, buying dates and selling dates. And now we are looping through every single row in the data frame. So let's do that with for I in range, length of the data frame. If there is a yes in the buy column, we are appending the name of this row, which is the date, to our data frame. So let's do that. If yes in the buy column, and now I'm using iLog to check for the row value here. So to iterate through every single row and check for the row I. So in the very first iteration, I'm just checking the buy column in the very first row here. And now, if there is yes in the buy column in every single row, I'm appending that row name, which is the date, to my buying dates. So I'm just taking buying dates, append, and then I'm taking the iLog and take the I, and I'm also adding a 1 here because as we said in the beginning, we want to buy on the next day's open. So I'm just adding a 1 here to get to the next row. And as said, I'm taking the name of this row, which is the timestamp or the date. Okay. Now, the more tricky one is to define the selling date, as we have to account for the RSI not exceeding 40 over the next 10 trading days. Therefore, I'm using another loop to check the next 10 rows RSI value not exceeding 40. So let's do that. For J in range 1 to 11. So 11 because 11 is excluded, so we are just checking until the 10th day. And we are using if the RSI value, and we are locating for I, because we are going through every single row now, and add the J iterator, which is the loop accounting for the trading days after this I is triggered, and this I is again triggered if there is a yes in the buy column. If that is above 40, then we are appending to our selling dates list. And in this case, we are just taking I plus the J, so the dates where the RSI value is above 40 after buying the asset. And we are also adding a 1 because even if we are selling, we have to sell to the next day's open. And again, we are taking the name here, which is containing the timestamp or the date. And if that's the case, and that is very important now, we are breaking the loop. Because if the RSI is exceeding 40, we want to exit the trade, right? So let's say it's above 40 after 3 trading days. And if we wouldn't break the loop, it would also check for the 4th, 5th, 6th day and so on, right? So we have to break the loop. But we also have to account for the circumstance that we have not an exceeding RSI value. So therefore, we are just selling after 10 trading days. So we can implement that by just defining elif. The J is 10. So this is the inner loop here, the subsequent trading days. If that is a 10 here, so if that is the last step of the iteration, with the condition that this is not happening because we are not breaking the loop, so we are at the end of this loop, then we are just appending to our selling dates and we are just using the exact same syntax, right? So this is again just accounting for the case if the RSI value is never exceeding 40. Okay, so yeah, you have to go through it. I made a mistake in my last video. Thank you very much to the one correcting me. Yeah, as you see, pretty complicated. So if you have a better idea to do that, of course, always be kindly invited to drop me a comment on that. So, but in this case, it should be right. So we are returning the buying dates and the selling dates now, and we have done that. Now let us test those two functions with an example. So let's define a variable, which I'm just calling frame, and I'm calling the RSIcalc function and provide the very first ticker symbol. I think it's 3M. And what I'm also doing is I'm defining buy and sell, and this is just the get signals function, and with our frame as the argument. So this should work. No, it doesn't because I wrote it wrong. RSIcalc, like so. Okay, so we are getting this message here, perfect. And we are getting the buying signals for this ticker symbol, right? And what can we do with that? We can visualize that. So let's do that. PLT figure, fixed size 12.5. So this is just the size of the plot. And now I'm using a scatter plot to visualize the buying signals. So I'm taking frame, log, screen for the buying signals and take the index out of that. And for the y-axis, I'm taking frame, log, take the buying signal, and I'm interested in the adjusted close here. Define a marker. So these are just visualizations. It's not that important. I just want to show you how the strategy would look like. So I'm just plotting the adjusted close here. Adjusted close with an alpha of 0.7. And if we're doing that, you see that we are getting this chart. And I think it's always nice to visualize data that you are seeing what's going on here. So here you are buying the asset on these green markers here, right? So seems to work sometimes not that good here in this case, but for me it doesn't make much sense to plot the selling signals as they are just like maximum 10 days later, right? So yeah, let's do one more thing. Let's calculate the profits for this one ticker symbol, and then we are going to do that for all stocks in the S&P 500. So a profit you are just calculating with the help of our function, so of our get signals function, because we use that to define our buy and selling signals here. So yeah, to calculate profits, let's just call it like it is. We are just using our frame, locate for the selling signals, so that is stored in cell, and we are taking the open price because we have defined that we are buying and selling to the next day's open, and I'm taking the values out of that, subtract the buying price. So to calculate profit, you are subtracting the buying price from the selling price. So we are just taking buy here, and again take the open values here, and now let's just check a relative profit. So I'm taking a relation to the buying price, so I'm just dividing that by the buying price. So I can just use this one here, and got that. So these are our profits. So for 3M, these are the profits out of this strategy. So let's calculate the winning rate so that you are understanding how it works, like in the subsequent example with taking more than 500 stocks. So to calculate the winning rate here is, let's just call it wins. I'm just taking I for I in profits if I is larger than 0. So then we have a win here, right? So to calculate the winning rate, I'm just taking length of the winning wins divided by the length of the profits. And I'm getting a winning rate of incredible 84% for 3M with this strategy, right? So yeah, the strategy is pretty awesome, as we already noticed, but now it's getting interesting, at least in my opinion. We are using that strategy now to apply that to all 505 stocks, and then we are evaluating if we still got a high winning rate and if we are getting more signals. So again, over 10 years here, or maybe a bit more than 10 years, we are just getting, these are all our trades in 10 years, right? So you complained about that, which is perfectly fine. So you can only make 37 trades in 10 years, that's not that much, right? So, but if we are taking more assets now, we have more signals. So we are doing exactly that. So I think you got the point. So in the next step, we are just looping through all our ticker symbols and yeah, apply what I exactly showed you. And then we are taking a look at all those profits and signals. So let's create 2 empty lists here. And I'm calling them metrics signals. And here I'm just storing our buying signals. And I'm also creating a list which I'm calling metrics profits. And yeah, here I'm storing the profits. So why metrics? So you can call it in another way, but it's a matrix which is being created because you are storing assets and you are storing profits for those assets. So you have more than one dimension. So we only have this one dimension here in the profits, right? But from now on, we are getting profits for all those assets, right? So this is why I'm calling that metrics, but yeah, whatsoever. So now I'm using a for loop for I in range, and then I'm taking the length of the tickers, right? Which is 505. And now I'm doing what I already did. I'm just creating a frame, which is RSIcalc, and then I'm just taking the tickers and yeah, I'm going through them. So I'm just providing the iterator here. So in the first iteration, I'm getting the first ticker symbol, in the second one, the second, and so on, right? In the next step, I'm defining the buying and selling signals, and I'm just using our getSignals function. Did I write that right? GetSignals, yeah. GetSignals, and I'm taking the frame. And calculating the profits as I did above here. So I'm just copy pasting this syntax here. Right, so I have the profits, and now I'm just appending to my metric signals. I'm just appending the buys, and for the profits, I'm just appending the profits. Right? Pardon me, before we are running this, we have to do one more amendment. That is, in the getSignals function, we have to limit this range as we are going out of this range when adding the inner iterator j and the 1 here. So we have to subtract -11 here and execute that cell again. And now we are ready to rumble. So we can just execute this. And this will take some time, right? So actually we are getting 505 of those bars, if everything is right. So see you in like 2 minutes. I'm doing a cut here. Okay, so after some time, we have populated our 2 lists here. And let's take a look at them. So the metrics profits list looks like that. So we have over 500 arrays here containing the profits for the particular assets. So one array, again, is containing the profits for the signals for one asset of the S&P 500. So overall we have, should be 503 because we dropped 2. Yes, we have 503 assets here. And now let's do some analysis how the overall profit of the strategy is. Therefore, I'm just looping through this metrics profits here. So we can use, let's create an empty list, which we are just calling all profit. And we are using for I in metrics profits. And I in matrix profits is an array. So we are using another loop here. This is a nested loop, by the way, for E in this I. So for the element in this array, so these are the actual profits, I want to append those to my all profit list. So I'm just appending E. So what I'm doing here, I'm just summarizing, or I'm just collecting every single profit of every single asset to calculate the overall winning rate. Okay, so yeah, let's execute that. And now we have stored all profits in a single list here. And with that, we can do a simple analysis. For example, we could calculate our wins here. So again, I for I in all profit, if I is larger than 0. And now we can take the length of this one divided by the length of all profits. And we are getting an overall winning rate of 71%, which is, in my opinion, at least pretty awesome. So yeah, what else can we check? We could take a look at the distribution of those profits. So you can show that with a histogram. So we can use PLT hist, then take a look at all profit. Let's take 100 as bins. So now, yeah, that's pretty interesting, and that is what's awesome about the strategy. So you see here the bin with the frequency of, I don't know, over 3000 here is actually slightly positive, right? So even if we are taking a huge amount of assets, we are getting positive returns on average, right? And that's actually pretty nice, at least in my opinion. So yeah, what else could we check? So maybe you are like, okay, I want to have the signals in 2021. You can do something like that for I in this, just to give you some ideas how you can, what you can do with this data. For I in matrix signals, for E and I, if E.year is, let's check for 2021, we want to print out E, and now we're getting the signal dates for 2021, and that's actually some signals here. So yeah, feel free to play a bit around with this data, with this strategy. And yeah, that's it for now. I hope you found this interesting, or at least helpful. And yeah, you could even do more stuff with this strategy. So if you're interested in that, please drop me a comment below, or let me know what you're interested in. I'm happy to take a look at that. And yeah, thank you very much for watching, and I'm looking forward to seeing the upcoming videos. Bye bye.